And hello and welcome everyone to Phoenixville Public Library, those of you in the community room here and those on Zoom, to our financial presentation tonight, financial empowerment presentation, given to us by Vivian Gaiko and Florence Ohen of World Financial Group. We're glad to have Vivian and Florence with us tonight. Please stay muted during the presentation, but type any questions into the chat. There will be some audience participation moments in which you can unmute yourself or type in the chat at those moments, and you'll know when they happen. So, without further ado, let's welcome Vivian and Florence. Take it away, folks.
Thank you. Thank you so much, Mark. Thank you for welcoming us to the library today to be able to do this education session today. My name is Vivian Gaiko, and our presentation today is on finances. And these are matters. Money is something many of us are always anxious about, most likely because either we were not taught so much about it, or we just do not know so much about it. And it's one of those areas we're either doing finances everywhere that we go. When we're shopping, paying rent, taking our kids to college, it's all money matters. So just a little bit about me. This is one of my favorite quotes from Warren Buffett, and it says, do not save what is left over after spending, but spend what is left over after saving, which is a principle I have really come to implement in my own life. I used to really spend fast and then have nothing to save later. But when I started saving fast, then spending whatever I had left, I found that I can have some savings with me. So this is me. I am a licensed financial professional, and just for for disclosure, I'm licensed here in the state of Pennsylvania and the state of Texas as well. And what we do is to provide financial education to communities and families, and to help them move forward in their finances. So why does financial education matter? Number one, it helps to build financial confidence. Without preparation, if we're not taught this in school, then we go into our adult life shaky and not knowing what to do with our savings and our finances. And sometimes we find ourselves going into unwanted debts or high interest debts. Just to give you some statistics here, the Bankrate 2025 savings report, it showed that about 59% of the families here in the US can't afford $1,000 of an unexpected cost. Let's say an accident happens or an illness happens, 59% of those families can't afford $1,000. They're either borrowing, taking a loan, asking for family members for help, or selling an asset. And 46% of those say they had 3 months of savings, and 24% of those did not have any savings. So why does financial education matter? Secondly, is to just prevent some of the costly mistakes that we make, and it gives guidance, because when you're financially empowered, you're able to avoid high interest debts. You are able to know that how to save, so that you don't miss out on an opportunity to save, and how to plan for emergencies. The third reason why we do financial education is because it really matters. We want to pass on these skills to our generation, so that when our young children are transitioning to adulthood, when they're becoming independent, they can be able to manage this and also pass that wealth that they create to their generation as well. There's a study that shows.
I'm sorry, can you just step so everybody can see the screen, thank you, including my camera.
Oh, okay, I'm so sorry about that. So these are the 3 reasons why we do financial education. And there's a survey also by CoinLaw that was done. They noted that 43% of high school students, they said they never learned any basics about banking. And what does that tell us? It tells us that our young people are transitioning to independence without having the most important knowledge on finances. What are some of the challenges that come with when you hear about finances? Maybe I can ask some of my audience here in the room with me. What is something that pops out to you when you think about the challenges that just come with finances?
Well,
Yes, go ahead.
Go on, dear. I was just going to say that my husband always says, without him, I wouldn't be saving anything, so
Oh, wow.
that may be true.
Oh, okay. Saving. Any other thing? Lack of enough savings. Go ahead.
Yes, in 1987, I think that's when the market went down 400, 500 points. There was not a stop loss. So I had just started working for a stock brokerage company, and the boss who just started his company was not paid for 3 years. And I made minimal. Yeah, it was, and then when COVID started, a lot of situations occurred. And when the Twin Towers came down, a lot of the situations occurred. And then immigrants from other countries started coming over here, taking over the whole departments of finance and working for a cheap price.
Yeah.
I'm older than I would like to be. As a
Thank you for
former
sharing.
teacher, yeah, I would always get the licenses to be a better secretary. I always ended up behind the desk, taking orders.
Taking orders. Thank you for sharing with us. And
Thank
one
you.
of the market downturns, that's one of the challenges many people have to deal with. And when we hear that, it just makes us really unsettled about our finances. There's inflation. And what I mean by inflation is that, let's take an example of this bottle of water. If it costs $1 today and I save $1 in my bank account, at the end of the year, the inflation might cause the prices to rise. But let's say this water bottle costs, a year later it costs $1.50. But in my bank account I still have $1 and maybe an interest of 0.1. Will I be still able to buy this bottle of water the next year? Probably not, because I don't have enough money. And that's inflation. That's what inflation is. The other is debts, credit card debts, loans, mortgages, rising costs of living. I know eggs, the price of eggs has just started going down. We have taxes, uncertainties, emergencies. For example, sudden loss of a job, an illness, an accident or injury, and this is one of those that have been leaving people financially distressed. Chronic and critical illnesses, and that comes of course with a huge hospital bill. And medical debt is one of the areas that have really put families down in terms of their finances because it's very expensive. It's interesting that almost 90% of Americans have medical insurance but still are struggling with hospital bills, so that's a big challenge as well. There's also the fear of running out of retirement money. Yeah, we don't have enough savings, so we go to debt, and so that leaves us with us having that fear of running out of money because we've been spending it, we've been dipping into our bucket where we're saving. So these are some of the challenges that we face. So just to recap on what we actually do is we just share some of these financial concepts, and we help families to build their financial wellness so that they can live their best lives. And we do this by sharing the concepts and do some tailored strategies, because a financial review is very individual, it's very personal. So we tailor it according to somebody's needs. And now I want to go ahead and welcome an amazing mentor and friend, and also my business partner. Her name is Miss Florence Ohen, and she has been in the financial services industry for the last 14 years. That's a decade, almost a decade and a half, helping families here in North America to build their financial prosperity. And I'm super glad to be working together with her, and allow me to welcome her so that she can share some of these concepts that we share with families. Welcome, Ms. Florence.
Thank you. Awesome. Didn't you do a great job? Thank you, Ms. Vivian. Thank you, everyone. Thank you for welcoming us here. I love what you said, you know.
Oh, and there is more, which I will not state, in the current situation of what's occurring
Yes.
within our nations, plural. Thank you.
That's why we're here. Are you seeing me well?
Yep. Mhm.
Okay, excellent. Well, for those of you watching us online, thank you for joining us. Just like Vivian said, Florence, Ohen, you know, the market crash of 2008, what was brought me into financial services industries. At that time, young graduates coming out of college, working in the pharma industries, I became a day trader, but I lost it all when that market crashed. And I'm like, what? Really? Okay, so what next? So that's when I went for knowledge, because knowledge is power. And I got this knowledge from this company. I said, you know what, I'm not gonna keep it to myself. I wanna share. So today, I'm practicing out of 22 states that I'm licensed, trading here in Pennsylvania, just to help people, retirees, all ages, young people. Because if I had this information, 2008 that happens, would not have depleted all my hard work for 10 years, everything was gone. All right? I used to trade with E-Trade at Merrill Lynch, you know, buy shares, and money was coming and was cruising. But nobody told us that one day you'll be sleeping and everything is gone, right? And so as you walk through us tonight, we hope that we're going to be able to leave tangible information in your hands, not just for you, but for generations, your community, all right? So I put up together here what we call wealth equations, right? So wealth equations, how do we get that? You take a look at I means income, right? L, so it says that your income minus your lifestyles equals savings, right? But take a look at what is happening here. Many a time we don't have the savings, right? Just like Ms. Vivian said, so many of us, we are taught to go to work, go and spend, right? Before we save. But tonight, our educations, our informations should teach you how you save first before you go and spend what is left. Because your income minus lifestyles equals savings. And because we don't bring enough income, so many of us lack savings, and for that, our lifestyles sometimes suffers, right? So if I were to ask show of hands, who's actually having and enjoying the best lifestyle that I ever dreamed of? Many of us, we are compromising. You know, when I was little, I used to think age 50, I'm retired, right? And then 50 comes, the market crashed, and where's the money to retire, right? So the lifestyle suffers. So how do we solve this? How can we help the community? 5 ways to help you build wealth. If you focus on these 5 things, 2008 can happen again tomorrow. It can happen tonight, but you're going to be safe. That's what we are talking about. So how do we make sure that we have enough income coming into the family so that we'll have enough to pay ourselves? You know, it's called pay yourself strategies. A lot of people are thinking that you have to be making $1 million for you to save, have money to save. No, you're going to have to pay yourself whatever hourly that you are making. Take that 1 hour out of the 8 hours a day work and you put it on the side. And then you go and look for a a place to live, accommodations, and every other lifestyles that can take up to 7 hours of your work. And you do that, 30 years, you're gonna come out on top. So basically, if you follow this, there are two ways that income comes into the home. So many of us are on active income. Active incomes. And the problem with that, active income, there's nothing wrong with it, it's okay. But the question is there, what happens if uncertainties comes in, like COVID, like every other thing else that can come in, and you are unable to bring income? So that is why, especially for the younger generations, they have to learn that there are two ways that while you are building your active income, you also need to get started on passive income. Passive incomes are those incomes that you don't have to be physically there. If you're sleeping, you can be making money. That way, we can have enough. Once you master this, how to bring income, enough income into your home, the next thing we do is to show people how to save money, and saving money in a way that you're gonna be able to get out of debt and save money that is growing in a place where you can avoid inflations, just like Miss Vivian demonstrated to us. This water, I remember back in the days, a dozen of egg is 25 cents, 10 cents, right? And now, I went in to buy a dozen of eggs. Organic says $14, I think I paid it. I'm like, what? Anyway, so this is why we need to make sure that not just to save money, but where is the money? Where is it? Is it underneath the pillows? Is it in the basket? Is it where? Because if that money is not growing above the inflation rate, 10,000 yesterday, it's gonna be 1,000 tomorrow. 10,000 yesterday, it's gonna worth 1,000 tomorrow. The cost of buying power. Because we don't know where inflation is gonna be tomorrow, right? So we need to make sure that we are growing that money uninterruptedly, compounding interest. How many Americans understand the compounding effects of money? And this is why financial education is important, just so we can show people. When you go to China and most other countries, third grade is already learning this. But we are lacking that here in America. And so you also want to protect your wealth, you want to protect your growth. Because if you put the money where, like myself in 2008, everything was gone. My 401k was washed out, and I also invested in real estate properties, and the whole thing just went down. And that's because it wasn't protected. These are physical assets. They are in a very volatile market. And when it comes to certain, we call it earmark monies, it should be in a brick house, not in a volatile market. And so many of us, so that's why we need education, so we know. And then we also show families how to properly transfer wealth. Because how would you want to learn that you're done building wealth, you lived okay, and you thought it's gonna go to your loved ones, and then we all know what happens with probate, right? Surrogate court household coming. So how to properly protect your wealth through estate planners and all of that, so that your loved ones can benefit from your swipe. The next thing is, do we know our options? Knowing your options, right? And this is where the licensed professionals comes in place to show you. So I'm going to be focusing on 4 key things here on your options. The income protection options. You are going to work 9 to 5, and all of a sudden, you got laid off or something happened. So how would you pay your bills? It's your income protected. You get sick, cancer. I had a friend, a licensed professional. We were all together just about 3 weeks ago. And today we are learning. She's dead. 35 years old, right? With 3 young kids.
Precious.
Yeah. So what's going to happen? So this is why it's important that as we build lives, that we make sure that our income is protected. Should uncertainties happen, of course, right? The other one is, how do we replace supposing premature death, of course, like that of a friend that I was just talking about? Are we all ready? Are we protected? Is our income protected? Is our loved ones protected? Right? And we talked about that. And so here, we have retirement options. That's another one. Let's assume that the number one, life was good, we are blessed, we didn't have any of those uncertainties, no chronic, no critical, so we didn't need any of that. And then also, we are blessed with longevity and we didn't have to worry about, premature death and things like that. And so longevity comes with also another price. And what is that price? The price of retirement, right? And so, I just asked, I'm sorry.
Mark?
I just asked Mark, I said, Mark, when are you retiring? He says,
Let's not go there right now.
Okay, so Mark is ready to retire, And so, retirement, do we ready for it? We know when we're going to retire. And then also children's futures, legacy plan, that a lot of us have children. Are we ready for them? And these are the information that what are we going to leave for our children? What are we transferring to our children? Are we transferring poverty or what? These are the things that as we build lives that we put into consideration. And the last one is an income, which we talked about passive and active incomes. And so, but the one that I really, really want to show is, okay, let's talk about the income replacement, right? And so how do we even know to say, this is how much I need? How? We use what we call dime method. Everyone needs to understand this because this is our daily lives, right? Everyone has credit card debt. We all have taxes to deal with and so on and so forth, right? And so D means debt, and then the I there means income. So if you are making income, just to get yourself ready, at least to know that you are on the right road, that the GPS is taking you to the right direction, you have to use these equations to plug in to start that journey. So you take your income times 10, you multiply it and say you 10x it, and we're also going to bring in mortgages. If you have mortgages and all of that, which is the M, we'll bring it in. And then E means education, just in case if you have any kids that you need to prepare, send to college. And so, in order for us to find out how much replacement income we're going to need, we're going to, income protection, we're going to go to what we call FIN, okay? So we know how much, what we have, our income, we know the credit card debts and all of that, which is called dime. Then we're going to bring the FIA. So this is the amount that we're actually going to need in retirement. So the other one is the dime method is to help us. How much income replacement do we need? And now we need to find out, okay, we are going to retire. Like Mark, he's going to be retiring in 2 months or so. So he already went through this, so he knows how much he is looking for. So let's take a look at what the FINA is saying. At what age would you like to retire? When I do this data, everybody says 65. I said, do you even realize that Retirement age is now 67, no longer 65.
Even higher than that with our current, yes.
It's
Yes.
even 70 now, it's even. If you go to Social Security, you have to wait till 70. That's what they say. If not, you're gonna, anyway, that's another story. But anyway, so 65, great. But how much? How much? At 65, and the life expectancy, saying we're gonna live to the age 100. So then how much are we gonna need? Right? I just use this as an example. Right now with the inflations, if you're getting $5,000 a month, what kind of lifestyle is that? After all the light bill is up, everything is up, right? The cost of goods is up. So we might gonna need more than that, more than 5,000. But let's just be on the conservative side. Let's say we're gonna need 5,000. How would you find out how much you would need? So life expectancy is what, 85 on average, 85? So let's go below that. So if you're retiring at 65, you're gonna live for the next 20 years to age 85. And so what do you need to do? Monthly income, right? Times 12. So let's say that your annual income is 60,000. And so you're gonna take that times 60,000 a year, times 20 years that you're gonna live in retirement. So in retirement, you no longer bring in income. Your $60,000 is not stopped. So how would you replace that? How would you? How would you get ready for it? This is why we need to start saving money on time. We need to start on time at the young age, and we need to have this information, because if we don't have this information ahead of time, we're just gonna be partying and going to Cancun, Mexico 4 times a year and all of that. Before you know it, retirement is knocking on the door, and so many of us don't have enough money to retire. So 60,000 times 20, it's 120,000. So can you imagine if you are age 60, you have 5 years to retire, and then you are getting to find out that you're gonna need 1.2 million to retire. How are you gonna save that? Now, where would you even save that money? Where would that money come from? Where would the growth come from? So let's do that. So how many years away from a retirement? So most people don't start thinking about retirement until they're in their 50s. This is why myself decided to get my license, so that we can change that. Retirement should start, we should start thinking about this as soon as we are 18, 19, 20, not 50. It's too late. Not enough time for that money to grow for us. So here, if we wait until we're 50s to start thinking about retirement, 15 years later, we need 1.2 million. So if you divide that by 15, because we're 50, we're gonna retire 65. Now, 15 years. So that means we're gonna be putting away, we have to be saving $80,000. So what happens if you don't even make $80,000 a year? How are you gonna save that? So if you divide 80,000 times 12, so that means every month you have to be putting away $6,700 in order for you to hit that goal. And with the inflations, with taxes rising off the roof, with everything that is going on, who has $6,700 every month after all their bills, just to put away? So the questions for you that are on the online, and thank you for joining us. Outside what we are doing currently right now, if we haven't really reaching our retirement goals, what are the plans that we put in place to be able to hit this goal? Knowing what we know today, what are we going to do? So that's the reason why knowing our FIN is very, very important. knowing our dime, using the dime method to find out how much income replacement we need, and also knowing our FIN, so that we'll be able to ride into the journey. So, in conclusions today, our next step is, as a complimentary, we can sit down with you. We have, for those of you that are on Zoom, we have the QR code. If you are intrigued, or if any of the things that we mentioned today, it's something that that you would need, you would want help, we can give you a free complimentary financial reviews. All right? And so that brings us to our conclusions today. And we just want to thank everyone for participating, for allowing us to do this. And please spread the word. Don't keep this to yourself. We do have our contact information. And in case if you need to ask me any personal questions, or Ms. Vivian, we have email there. We have information. We also have the survey form. If you just want to take a moment to go through the check mark, and we can see how we better serve the community. Once again, thank you for having us.
Did you want to open up for questions?
Yes.
Okay. So people in the room or people on Zoom, feel free to unmute or type in the chat. Any questions at this time? Anybody have anything?
How long if I'm allowed to ask, how long has your company been in existence? Is this your company, or you're working for somebody else?
Okay. So we are an independent contractors. Okay. We are brokers. So World Financial Group is our brokerage company. They are not financial services industries. They just manage us, the agent. We use their brokerage license to practice. They've been around, World Financial Group, I think in 1990 they changed the name to World Financial Group. But prior to that, there were all the other names and other names and other names. I think they've been around for like Hoover Humphrey, what is that, maybe 80, 100 years or so. And Aegon, Aegon, it's our parent company. Aegon, it's a worldwide company and been around since 1844. Okay? So it's a very, very solid company. All right. And
Don't see any questions on Zoom. Anyone have anything?
And so the way we do business, we partner with over 200 retail companies. So we don't just deal with one company. We are client advocates. We educate clients, and when if come into your home and see, and then we'll connect you to the company that's going to serve you.
How close is your attorney that you work with? Or how convenient or affordable? The words aren't coming out, I didn't have dinner yet. There's a lot to investing. There's a lot to the cycles. There's
Yeah, we do have estate planning lawyers that sometimes work with us, that we can, in case if the need occurs, then we just recommend this is the one that comes to our office and help our clients that need it. So, yeah, but for the most part, the companies that we deal with, these are solid companies, all right?
I'm sorry, they are what?
I said they are solid, reputable companies, most of them for more than 100 years. If I mention them, I'm sure Nationwide is on your side, Transamerica, Pacific Life, so many. All right, Fidelity, we deal with all the companies.
Do you deal with various forms of annuities?
Yes, annuities and life insurance, and long-term care.
Because I know some companies no longer permit you to sell long-term care insurance.
That's because the life insurance is evolving. Now, most life insurance come with it. So you don't need to buy standalone long-term cares anymore. So you're actually saving a lot of money in doing that. Okay?
And where is this, dear, where is this number located, the 908? I'm not familiar with that area code
That's my number. I'm right here in New Jersey.
in New Jersey.
Yes. Hickstown, New Jersey. And
how-
then my
how
office
many
is in
sta-
Edison.
I'm sorry?
My office is located in Edison, New Jersey.
In how many states are you licensed in?
I think I'm dropping Connecticut, so, that's gonna be 22 states.
So it's a lot of financial to,
Yes.
yeah, I worked with licensing before, only as a secretary behind the desk.
Mhm. Yeah. Yeah. Yeah, because in these states that we go to, we have to be approved by the states in order for us. So I've been licensed in Pennsylvania since 2012, I believe. So I do have a lot of clients here. Yeah.
Anything from anyone else? Otherwise, we will bid you adieu for tonight. All right. Thank you so much, Vivian and Florence.
All right.
Thanks for joining us, everyone, on Zoom and here in the library. Good night.